Good morning. Welcome to a live webinar with Admiral Markets. My name is Chris, and we're going to take a look, of course, at strategy today. Today's focus, candlestick patterns at critical support and resistance. It's part two of a 30-part series. Last week was the first one. So thanks for joining today. We're going to take a look at the Forex market, perhaps some commodities and stock indices too. First, be aware, though, that this webinar is shown to a global audience but may not be suitable for everyone. Please visit admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity for more details. Also, please be aware that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. Alrighty, so let's take a look at the market. Quickly though, first a glance at admiralmarkets.com. If you're not aware, Admiral Markets is offering a lot of things, including analytics, education, but of course primarily a method to reach the markets through platforms, MetaTrader 4 Supreme Edition, custom-made platform with 60 plus extra plugins, indicators, tools, makes trading a lot easier, and of course the ability to access the market through a demo or live account. Today I looked in my wave analysis at the rising wedge that we saw yesterday potentially building up, and that is of course a potential reversal signal. So we're looking at strong signals, strong reasons why the euro dollar should fall yesterday. So I was looking for a short right then, right there, and so far so good. Did have some ups and downs, but is slightly going to the downside indeed, and broke at least the rising wedge. Now whether it will continue, you can see the break right here, and whether that will continue is something that remains to be seen, but it depends also on today's price action. So let's take a look at some of those candlestick patterns perhaps that we might have seen with the euro dollar. So first of all, what is critical support and resistance? And this is something that you can automate or you can do manually. Automation could be, for instance, the Murray math levels using fractals. The manual way to do it could be fibs, could be basically drawing trend lines. Another automated way is this Keltner band or pivot points. Why automated? Because those are things that automatically adjust as price action goes along. So that's why automated. And basically, that, or a mixture, of course, is possible too. I personally, for my trading, use Keltner, Admiral pivot points as part of the MetaTrader 4 Supreme Edition package that you can find on the website. I use fibs, trend lines, of course, tops and bottoms, and fractals. You don't see fractals here because I don't want to clutter the chart too much for you, for people watching my chart, but I personally like to use them. So yesterday price was about here, and this was the confirmation candle, in my opinion, for a downside. Price made a small upside here, as you can see. Couldn't break above 112.50 though. We're talking about 15, 20 pips, and then started to fall actually, and we're down to 111.70 at the moment almost. So anyone taking an entry around 111.20, I think where price was yesterday when we were looking at it, is up about almost 50 pips at this moment. And looking at the hourly chart, you can see that price is trying to break this mini bear flag that I just spoke about when looking at the wave analysis, which is a good thing. So if I put a fib from here to here, price should get to 111.50 or maybe even 111. I'm not sure how far this can fall. There's a pivot point as well, a weekly pivot point, which is of course a support level. So I think using a trail stop makes sense. I myself like to put the trail at 112.05. That locks in some profit, also reduces the risk on this trade. Just in case this closes and reverses for whatever reason, don't forget that the larger trend at the moment is still up. So this could be the start of a new downtrend, in fact. That's possible. But it's risky to assume that This could also be just a correction and up it goes. So my bias, my analysis favors the reversal, and I think that is the most likely at this moment. But I'm always thinking what if, and want to find a balance in that. And I also want to keep an eye on, of course, what price action is telling me. What is price communicating to me, and how does it affect my current analysis, and do I want to change it? So at this moment, I think a reversal is more likely. But even if this is a reversal, it could hit the weekly pivot point, then make a three-wave correction. This could be a wave 1, this could be wave 2, and then start to fall more substantially and heavily. So always be aware of that, these ups and downs, these waves. Even though you may not, this is not a wave webinar, nor do I want to make it one, but just be aware that even if you don't like waves, if you don't analyze waves, the market does move in waves. So, you know, we're kind of stuck with it. There's nothing we can do about it. That's just how the market moves. That's the rhythm of the market. So we could ignore that, or not ignore it. We could not analyze that, but we can't ignore it. We cannot, it's impossible to avoid it, right? We're always influenced by it because that's how the market moves. So even if we don't analyze waves or even label waves, we can still think about it and in a logical way and say, okay, how does that affect my trading plan when looking at something like this, a reversal, for instance. So, yeah, if you have any questions, just feel free to reach out through the chat. Good morning, Raj. By the way, I now see your chat. Good to have you here. And well, let's see how far this tumbles. But stop loss to lock in some profit and take the risk off the table. I think it's okay moment because it's breaking through this bottom. So it either goes or it doesn't. I think I've had enough patience for the moment with the short, and we'll leave it, you know, alone for the moment. I will leave it alone after I move this to stop loss. Right now, I can leave it alone again and give it some space. So a target at around 111.26, I think is probably good. 111.30. The other option could be just to leave it open. If someone took a trade early, like in here, leave it open and leave the stop loss here and aim for something more aggressive, right? Like 110. That's possible. You just have to, of course, have the stamina, the patience to live through this, potentially live through this, right? Or even this. You know, that's the only thing you have to be aware of. Regarding candlestick patterns, yesterday I was looking at the 4-hour chart and saying that these candlestick patterns at the Keltner is a resistance and support. You know, this one is not, these are not yet ready because the candlestick patterns are happening above the Keltner, which means that the reversal is not ready yet. But anytime there's a candlestick pattern in the Keltner after price has been above the Keltner, we're ready probably for a reversal. Now, we didn't have a candlestick pattern here, but we did have it here. So I thought this combination, although there was no official candlestick pattern above this one, it was strong enough to look for it. So this is a classical example live that we discussed yesterday of a candlestick pattern at a critical support or resistance in this case. Not maybe the most perfect example, but still a pretty decent example. We'll take a look at more examples in just a second. The other thing I wanted to show you was the daily chart. Remember that yesterday we were looking at the daily candle. I said if this daily candle closes bearish with the close and the low, that should trigger more downside. So this is the candle I was approximately talking about. I went into length, I thought, pretty good detail how that candle should look like. And I said the close should be at least below 112 in this case, considering this context. The close was 111.81, so that was enough. And I would like a low also below 112. Well, actually I said the low below 112, and it closed not more than 20 pips away from the low. So yes, the low was 111.75. Close was 111.81. So the 6 pip wick, 6-pip close from the low below 112. So that's exactly how the candle turned out. Bearish candle and a candlestick pattern as well. Now this candlestick pattern close was not below the Keltner, so that's a bit of a disadvantage. But okay, it's not a perfect example, but at least you can see what I was looking for yesterday. This does confirm it, and I think that there's a good chance if today turns bearish that we should see more downside to come, maybe even testing 108, but first 110, of course. So this is a candlestick pattern and resistance, although not ideal because ideally price would have closed even lower, below this this Keltner. But okay, so a semi example here. On the hourly chart, we have good examples here though. Candlestick patterns at Keltner for a bounce, and let's see, anywhere else? And you can see the risk of taking candlestick patterns that are above Keltner because of the fact that they could be too early. Here's a good example of a bounce, although price didn't break below it. So you see a couple of examples where price bounced at Keltner. So there's two different, if you use Keltner as a support or resistance tool, there are two ways of using it. Either price has broken above it and you use it as a reversal, or price has not broken above it and you use it as kind of a way to catch a trend trade, right? Trend is up, so price is retracing, and this could be the continuation for more trend. In that case, it doesn't have to break below or above the Keltner. So for trend continuations, it could just reach the opposite side of the Keltner. For reversals, it would need to break above it or below it then, and then return back into it. So these are some examples on the euro dollar using Keltner and using candlesticks, candlestick patterns at those key levels. Now I'm using this candlestick indicator, as I've already mentioned a couple of times the last few weeks, just to show quickly where those patterns are. You don't have to use it. These are like training wheels in a way. Once you feel confident in spotting candlestick patterns, you don't have to, of course, keep it on. You can remove it, keep the chart cleaner that way. But it is a good tool to accelerate the learning process because honestly, even I would not, after all those years looking at the market, spotting all these patterns, I would not pick up all of them necessarily because there's a lot of them, and I tend to see a few of them, maybe the key ones, but not spotting all of them. So it's definitely something that if you're really keen on it, you do capture a lot of them like that, a lot of patterns like that. I mean, so if you're interested, by the way, in this indicator, then I'll just quickly share my email. All right, there you go. So if you're looking at it live, I will paste this in the chat as well, so you can copy that. You just have to send me an email. Replace at with the snail. I can't write the at the moment because of the fact that I'm using a drawing tool. And if you're looking at the recording, you can just pause it right here, right here, and write it down. All right. So I think there's a good chance the price will fall down to the pivot point and make a three-wave correction like this and then fall down again. So what I'm interested in at this moment is trying to sail with my short to the target, all right, just to keep my short to the target. I'm not that interested in scaling in an extra position here, personally. I guess if you're not in the trade, I don't know if that makes sense here. It could. I would say it depends on this candle. If it's a good breakout candle, maybe. But, well, I don't know. I just, from my point of view, would like to just to keep this one trade put the stop loss, place the stop loss here, lock in some profit, and hope to get more profit at the PP. That's my thinking at the moment. I might even think about a bounce here, but that's a fragile one, but could be considered. Candlestick pattern at the weekly pivot point, and the Keltner could see a three-wave upside, and then I would be looking for a candlestick pattern at resistance, try to see if there's some potential head and shoulders for a downside further. So these are my current ideas on the euro dollar and what kind of candlestick patterns I would be looking for. All right, pound USD. I thought the euro dollar was better yesterday, and I thought the pound was kind of iffy-ish because of the fact that it was in a consolidation and in a triangle, and it could really break both ways, I said. Although if I had to choose, I would rather choose the short because ultimately I think it's more of a reversal pattern than a continuation pattern. I did say, though, that the stop loss, in my opinion, if the short is taken, it should be above here, and the target should be about here. Now, actually, ironically, just after, or not too late after, not too long after we closed yesterday's webinar, price shot up, in fact. So that just actually shows you how vulnerable price is when it's in the middle of a triangle. But it didn't break, actually, the invalidation spot. So price is still in this formation. So if it, once again, breaks above this resistance, it could be a long-term breakout. I would like to see a daily candle break above that level, break above 130, 130.50 for me with a close near the high. That's the candlestick pattern I will be looking for on a daily chart like this to confirm a breakout to the upside. So that's a candlestick pattern, potential candlestick pattern, but that's the type of candlestick I'm looking for. Break above 130, a close above 130.50, and a close near the high for upside. And I will look for intraday, intra-week trades to the upside later this week or next week. But for the moment, price is not doing that. Price has respected this resistance once again. So it's back below the pivot. So same thing like yesterday. If it could break resistance, if it could break support with a good 4-hour candle, I think there is a good chance of a further downside to at least the S2, if not the S3, or perhaps even further. So from a candlestick point of view, sorry, looks like it didn't work. 1 second, I'm rebooting or restarting. Just a quick look at the candlestick patterns then. 1 second. There we go. Regarding candlestick patterns, this was one, of course, at resistance, right? And we had a couple of here already. These, but yeah, this is in the middle actually, just like these. So those are not that great. We're looking for candlestick patterns at support or resistance. One could argue that this one is still near the trend line and is a reaction to the trend line. So might consider that one, but it's an iffy one. These are more in the middle of the field, so I wouldn't consider those to be examples. Not at all, actually. But other examples could be here and here and here and here. So those are bounces within the Keltner on this 4-hour chart. So there's some examples there. Daily chart, we have a bearish candle here a few days ago. That's still active and it's getting stronger with yesterday's bearish candle and the fact that that high 3 days ago has not been broken yet, or three candles ago has not been broken yet. Considering also the double or triple divergence, and there is a case to be made that price could reverse to the downside. So those are some examples on the pound. Let's see how that shapes up. The dollar yen talked about the iffy kind of break here last time, is that I rather moved the support trend line to this bottom. And you see why. You can see that this correctiveness, in fact, it did lead to this formation. That's why I was not too excited about the shorts and the downside potential, as price should be moving faster, but in fact was moving slowly and correctively, which has led to this kind of three-way formation. From my perspective, 112, 112.50 key levels, because if price stops here, it's still a short environment for a move down to 110. If it breaks above 112 and 112.50, then this is looking more bullish. So key is this Keltner right here, for instance, at around 112.25. Let me get rid of this fib. If it does move to the upside, it bounced off a 61.8 fib, and this could be a bigger move up like this. All right. And if it does turn here, it could go down to the 78.6 fib, which is again a bouncing spot. So what are key levels to keep an eye on? Candlestick patterns at the 78.6 fib. Definitely. That's one of them. Another would be candlestick patterns at here, 112, 112.50-ish, this area. Bearish candlestick patterns, we'll be looking for shorts. Bullish candlestick patterns that break above this level, looking for maybe some dip, but then continuation upwards. So, in fact, it's one of those zones that could lead to trades on both ends, in my opinion. But it all depends on what price does. What kind of price action do we see? What kind of candlestick patterns are available here? Interesting enough. But the spot itself could actually be a bounce or break spot, and I would be interested in both, in fact. Another trend line here, indicating the zone. So it's a bit higher though, but okay. So anyhow, you get the point. One of the reasons as well why it's important level is, look at this. If this is a correction, then it should stop at the minus 27 or minus 61.8 target. Max this one, probably this one, right? So that's why this is a good turning spot. But if price breaks through it, then I'm going to listen to the market and basically, adhere to it or go along with it, go with the flow, right? Just because I might think this is bearish, let's say, doesn't mean that it has to be bearish, right? So a lot of traders, I think, mentally maybe get stuck in the fact that this has to go down. This is a good short, and it must follow that path downwards, right? But the market must not do anything, right? So just because I think it might be a good bouncing spot doesn't mean it has to bounce here. It could actually break to the upside. So that's something we always have to be aware of. We should have a plan. We should have an idea about what we think is most likely, but we should be, let's say, on guard about whether it is indeed what we think is taking place or not. Is it being confirmed or invalidated? And we should be open to that and flexible enough to respond to that, but also not nervous. Not nervous about it, so that we look every 1 minute candle to adjust our plan, right? So we got to find that balance in being patient, but not too patient. So being not nervous at the beginning, but not overconfident, as it may turn out that the trade is not going our way. So that's I think the balancing act in analyzing and managing trades and taking trades. So, but anyhow, candlestick patterns in here could be interesting. Bearish candlestick patterns, but bullish just as well. All right, Kiwi. I spoke about the Kiwi yesterday and said that price should go back to the 23.6 fib or the 38.2 fib. That would be a good bouncing spots for one more push up and a break above this high. Price at that time was, I think, somewhere here. I'm not sure if this bearish candle was there actually. Let me think for a second. Let's see. Yesterday's webinar was at 4 p.m. I don't think so. I think this candle happened after we closed, but I'm not 100% sure. That's my guess though. But indeed, so getting down almost to the 38, just hitting the Keltner and bouncing would have been nice if it just kind of tagged that 38.2 fib. Now it missed it by about 5 pips, which is not too much. So basically, not any, in my opinion, not a good signal here though. So that's sometimes a risk. Of course, that price might kind of turn around, but not in a way that gives us maybe a solid, clear kind of method of entry, and that's the risk. That's one advantage of having pending orders at key levels and saying, okay, I'll take that. I'll put the stop loss there. I think that's what Nana does right on Monday. He has a level in mind, stop loss already all pre kind of configured, right? I sometimes do that, but like more the way of waiting for reactions. But sometimes if you wait for reactions, you might miss it, right? So is it too late? Not necessarily. I mean, the hourly chart, it has moved away a bit, but on the 4-hour chart, this candle is not closed yet. So if this is a bullish candlestick pattern, this itself might be already worth the reaction. The stop loss would have to go below the 38.2 fib though, 69.70 perhaps. And that could be a bounce to the upside. If there's another bullish candle like this, excuse me, then trail stopping the long with a stop loss below the low to lock in profit, move to break even, or even reduce the risk, I think makes sense. Okay, Ozzy spoke about the fact that here going long was not so wise because of the resistance nearby, although I didn't like reversals that much either because of the fact that I thought the euro looked better. But okay, it still moved down pretty neatly, and you can see, although it was not my favorite one, that these engulfing twins at the Keltner and R2 did prelude a fall back to the bottom of this channel. In fact, here could be again a bouncing spot. If there's a candlestick pattern here, there might be a continuation of this upside. Or if we get a bearish break, a candlestick pattern that shows a break, we might get the breakout to the downside. So again, key level, let's see what the candlestick patterns show at this key weekly pivot point and bottom of the trend channel. Breakout candle on the 4-hour chart, pound yen. One of those breakout candles though that is a bit annoying because it broke the resistance trend line, but it stopped right at the pivot point. It didn't break or close above it. So those are one of those candles and breakouts that, right, it's not the best. It could be good to skip that if you see multiple layers of resistance or support close by that seem strong. That's one of the reasons why a trade might be better skipped. Euro pound, looking at it yesterday too, around here and continuing to the downside. We're also, one of our attendees warned us of the euro pound reversal similar to the euro dollar, and I agreed with the viewer, and it is indeed making some retracement. I'm not sure if this is a full-fledged reversal on the euro pound necessarily though, but it's definitely retracement territory. I would say at least the back to the pivot point is a conservative target. Yesterday's bearish candle closing below the Keltner, I think, is not a bad signal right at R1 for the some potential downside. So a candlestick pattern like this, for instance, is a decent one. This is a reversal though, so that's always a bit more risky. All right, do you have any questions actually at this moment? I actually promised you to look at something last week, but now I unfortunately don't remember. Does anyone remember what I promised to show you? I think it was fractals. Was that correct? I'm not sure if anyone was here last week by coincidence. And if you remember. Um, but that's what I think. Anyone have a particular currency pair in mind that you would like to take a look at? Let me know. I would like to use that as an example when looking at fractals. Does anyone have any questions about support or resistance or candlestick patterns? Let me know as well. And maybe last but not least, does anyone use any of the two? I mean, what is your experience with using it? If you want to share, of course, you can feel free to drop a note or two. It'll be interesting to see if this is something that you found interesting or not so helpful. Let us know. Dollar CAD is a great example. We didn't look at dollar CAD yesterday and today, so it's perfect. So let's add some fractals. You can use custom fractals, of course. Standard fractals from Bill Williams, Indicators, Bill Williams fractals. I also have my own fractals. I think that's what I wanted to show, actually, my own fractals. I'll just do that in a second. Why are fractals handy? Because they automatically show support or resistance. So if you look at the daily chart, right, you automatically know what are the key levels of support and resistance. And they can zoom into lower time frames, for instance, and use those levels. So for instance, here we can zoom into the hourly chart, and we know that from a daily chart that this is a key level already, right? And indeed, price didn't break above it. Let's take a look at another example. It doesn't have to be necessarily a bounce. It could be break or bounce, of course. Here we had a support fractal, right? So let's go to the hourly chart. Oh, no. All right. I'm not sure what happened. 1 second. All right, daily charts. I was looking at a different. What pair was I looking at? Sorry. Oh, I was looking at the dollar CAD. Sorry. I'm getting confused. Excuse me. Daily chart. Yes. So don't be aware though that the fractal 2 days has to be confirmed, right? 2 candles to be precise. So the fractal is confirmed here on this day. All right. So then we can zoom into the hourly chart, and we know that this is a fractal support. So we actually have a bounce here, and then later, as you can see, a break. So it's automatically showing us key kind of bounces and break potentials on lower time frames. You could even use the fractals on the same time frame, but I like zooming in more personally. But it is of course possible to do that. When you see a wick like this at this fractal, could give you an indication that price is respecting that level. If you see a close below the support fractal, could give you an indication, or an entire candle, that price is breaking rather, right? So, and sometimes fractals don't give any value because of the fact that here's a support fractal, but once 2 candles close, price is way above it, right? So we won't be using that much, that particular candle, that particular fractal too much. Here we see a resistance fractal, but it has been used most likely at least once. This is the second attempt. So we know second attempts are like 50-50. And then if you have a candle like this closing above it, that looks like a breakout. Plus, of course, the Keltner too. Here you have a break below the Keltner, below the fractal with this candle, but the day after is a close in reverse. So, it's not perfect. This was a breakout, but the breakout failed. But we do see why it failed. We do understand when it failed, the day after. Very easy, because that's an immediate close in reverse, an immediate engulfing twin right there. So once we see that, we have to think, ooh, false breakout. right? Opposite direction. Thinking bullish now instead of bearish, right? So those things happen, but we at least see immediately when things fail. If you have fractals above the Keltner or below the Keltner, those are always a bit more levels of extreme. So if you break above this one, you got to be, it could continue for a while, but you got to be aware that price has really steamed already ahead a lot. And, you know, you might want to be careful about how far it could still push up. In this case, not too much, right? The break after the high, it went up still about 100 pips, which is not too much for a daily chart. Let me get rid of the mini terminal for a second. So this is how you can use those levels. Automatically, you can see them, and you can use it for breaks or bounces. Here you see a good breakout candle above this fractal and this fractal. And even if you don't use it as support or resistance, there's still potential turning spots. Look at fractal here. 2 candle closes below is this candle, right? Did price move up to retest it? No. But at least as price was making consolidation here, we knew that this particular swing high, swing low was over, right? And that the next swing could be up or down, but this is a new kind of leg, a new start. So there's a good chance that this could be a continuation of the bearish swing. So at least we know that. We might not find a trade on this chart, but on a lower time frame, it's good to have that info that the bullish momentum is over. We're not over, but at least on pause. Because that's where my custom-made fractals come in. These fractals show 2 candles to the left, 2 candles to the right. Nothing else. Basically, they will all look the same as well, color-wise. I changed my fractal to basically show more information, and that depends on the relationship it has with the moving averages. Let me show you. All right. So circles indicate that it is hard support or resistance. Diamonds indicate it's weak support or resistance, in the sense that when fractals occur above the moving averages, they are basically most likely occurring within a trend. So these resistance fractals or support fractals that have a diamond are actually fractals that occur within a trend. So these are resistance fractals, these green ones, light and dark green, that occur within an uptrend. And the circles here indicate that the support is basically, or these fractals are not in a downtrend, I should say. Okay? So now that's not going to be perfect, of course. There are going to be examples where price is consolidating, like this dollar CAD, and you might have fractals that are showing that it's a trend, but not do anything with it, right? Because there's a bigger consolidation. Here you have fractals indicating, hey, these are support fractals within the downtrend, right? But it didn't go down after that anymore because price is hovering around the moving average here, right? So on a bigger context, we see that this is a rangy, choppy environment. All right, so here though, we do see that, hey, these are resistance fractals within an uptrend, and we do see a further upside continuation, right? Here too, we see fractals indicating more downside, right? Here we see fractals appear, but no upside occurred. That can happen because as there are resistance fractals within an uptrend, of course, at one moment, a reversal will happen. So what you typically will see is price, for instance, here break above it, above the long-term moving average, hook back to it, and then bounce away from it. Here you can see that price is still showing that these both fractals are circles, indicating no trend at all. And here we see the first diamonds indicating that the fractals are in uptrend territory, and indeed up it goes, and it keeps these green fractals, and it keeps the circle fractals, as you can see, all the way up here. Even as it retraces here, it keeps going. This on the hourly chart, of course, could look like a downtrend already, but on the 4-hour chart, it remains up, 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 and then here we see that these are the first ones that don't live up to any continuation, and we get a stronger retracement. We get even a downtrend here. And then it turns into a bit more choppy. Here we have price basically making some downside, but not too much, because ultimately it is correcting upwards. And therefore we get the green ones again. This is a consolidation zone right there. And now we're back in the upside. So you can use these fractals just like ordinary fractals. Nothing changes. Support or resistance in the same exact way, right? Same exact way, because this is this is support, and this is still resistance. That doesn't change. Exact same implication. The only difference is the fact that it automatically shows what side could be more powerful, if there is a trend, what side is not trending. And it also shows, with colors, a bit of a tad of a difference, nuanced difference. This light green breakout indicates that from a time perspective, the breakout is not at the right moment. And indeed, price failed and moved one more lower low, in fact. So that light green shows, hey, it's a bit of a warning, in fact. Yes, it is. The trend is up, but the dark green ones are the ones that we like the most, in fact. Light green ones are still a bit of caution, because from a time perspective, that also is incorporated in this fractal. It is not ideal. Look at this one too. Not ideal. And indeed, that proved to be true. This one too, not ideal. Proved to be true too. Right? This one says, hey, this was a good fractal, but anyhow, we didn't get a break below it because price reverted back up, so it didn't really matter. So light pink, light green, not ideal. Dark red, dark green is better. The circles also have colors. The lighter the color, the more vulnerable the price is that it will not hold. This light pink one is therefore vulnerable for a break. I would not consider that to be a strong support level, because price has moved away from the moving average so far and so much that it is vulnerable to a break. Whereas the darker the circles, the more sturdier that support level probably is. Either dark orange or dark blue, by the way. So the sturdier that support level is. Also, if it's black, then that indicates a key turning spot potential. Here, black, for instance, that means it's either going to break or bounce at the long-term moving average, and it could have far-fetching consequences. Let's take a look at here, some example here, right? This was a key level. Break below it, we should see further downside. A break, a bounce, we could see an uptrend continuation. That was a break. Here, black circles, either it's going to be a reversal or continuation moment. Black circles, either reversal or continuation. That was a reversal. Here was a reversal. Here was a reversal. No, this was more of a continuation. Sorry. Why? Because price was above it already before that. Continuation, excuse me. Continuation, continuation, continuation. This one could argue as a reversal, right? This was continuation, actually. So that's it, really. But it gives me a lot more information, immediate, and still all the benefits of the fractal. Any questions about this? I would like to pause maybe here and ask you if you have any follow-up questions, perhaps, because that could be maybe useful. I'm not sure if anything is unclear. And if you also, one more thing, by the way, if you're interested in these fractals, you can, I had my email address somewhere here, I think. Oh, well, yeah. I thought I wrote my email address somewhere. But I'll do that again quickly. So if you're interested in a fractal indicator, my personal one, I mean, here too you can send me an email. Or if you're watching this recording, you can pause the video and write this email address down. Let's see. Sure, we can take a look at the pound on. Bar from 1500. I don't have a bar 15. This bar maybe. Is it this one you're talking about right here? The bullish one? With the red line? The one next to it. This one. This bearish one? To the left? Okay. So we see a break of the Keltner, in fact. Let's see. But we also see a long-term moving average come in. So it's kind of a squeeze in a way. From the fractal point of view, the trend is still up on the 4-hour chart. I'm not sure if we discussed this one yesterday or I don't remember. Now there is divergence between these tops. So from that point of view, a correction was indeed likely. And the target of that is the long-term moving average. So that divergence has now been cleared, has been removed because price has hit the target. The long-term target is the 144 when you have a double or single divergence, right? So once it hits the long-term moving average, it's either going to be a reversal spot or still a continuation spot. Now, that all depends on how price responds to this black fractal right here. So as price approaches this long-term moving average, typically the area around the long-term moving average, especially with divergence, could create a bounce, either at or just above or just below it. So from that perspective, it was some area to be cautious of from this perspective. Now the next one is a bullish candle. So you got a bullish engulfing twin right there that if anyone was looking for downside because price closed below the Keltner, looking for maybe an acceleration, the next candle should be your warning and should be something to use for trade management purposes because then you get engulfing twins at the long-term moving average at Keltner, and that short is in serious trouble because of that. Price also reached the minus 272 target, another confluence and potential reason for a bounce. So I'm not sure, what the reason was, why you're asking me to look at this candle. But these are just my observations from that. The candle close itself was okayish. It's not a great close, but it's not bad either. The close is, let's see, let me do a quick calculation here. Total candle from high to low, is about 80 pips, almost 80, 79 to be precise. Close is 75 pips away, so we can do that math very quickly with the calculator if you want. There we go. %31.6%. So it's in my gray zone. Within 5% is awesome, excellent. 5 to 10% is excellent. 10 to 20 is very good. 20 to 30 is okay. And anywhere between 30 and 35 is a gray area. More than 35, I would not think is a breakout candle worthy. So 30 to 35 is really a coin flip, is a toss-up, is very iffy-ish in any case. If you want to be more conservative, then you can only look for within 25% closes. 25 to 30 is a gray area already a bit, but more okayish. 30 to 35 is worse. 30 to 30, about 35, I wouldn't consider even looking at that for a breakout personally. So this one is not the best breakout candle from that perspective. You wouldn't say it because, I mean, visually it doesn't look like a big wick, but it is actually 31.6%. Yeah, that's it. I guess what I have to say about that particular candle. Any follow-up questions? Samuel, does it make sense? Okay, great. So, folks, if you have interest in the MetaTrader 4 Supreme Edition to get the Keltner pivot points and a lot of other things, here you can download the free, you can do that, download free plugin, admiralmarkets.com. Also, interested in volatility settings, protections, you can get it there. Forex 101, if you want. If you're new to trading, relatively new, the last few months, it's good to do this. And if you're interested in DAX, of course, feel free. More info in these tabs right here, including analytics and education, and the next webinars as well. Nanette has this live trading session later today, and tomorrow we take a look at trading points of confluence with more confidence. So I hope to see you soon, and well, wish you great trading, folks. Have a wonderful day as well. Oh, and talk to you soon. Cheers.